So it's a pretty bad mix, Michelle, of warm weather, infrastructure that's old, some big investments that were not made over the last 20 or 30 years that could really alleviate some congestion when it comes to these rails. I'm talking about a specific tunnel. All this means that it could be bad economically for the city.
Definitely. I mean, this affects the city. It affects the region. We really need to get these millions of people a day through the area, going through New Jersey into Manhattan. And it's just, you know, people are trying to get to work. They're trying to get to school. They're doing their shopping. They're going to medical appointments. There's the nightlife as well later on in the day. So there's a lot going on. And that's always been New Jersey's selling point of, we're going to give you the best of both worlds. You can live here and live in these great neighborhoods and also have access to the New York City job market, all the fun stuff going on in New York City. And when it just becomes such a headache to get around and starts becoming very costly to get around, that's then becomes a harder sell.
Yeah, I mean...
You know something about this, Katie.
Yes,
So
Katie does.
I'm from New Jersey. I drive out to New Jersey 3 times a week to go horseback riding. That's a different conversation. But every time I'm sitting in traffic in front of the George Washington Bridge, I curse the fact that Manhattan is an island. It's very difficult to get on and off. And, you know, Tim mentioned how people have been mad with their commute for the delays. It's costly, and it got more costly today because fares on NJ Transit rose 15% today. That is the first hike in 9 years. Where is that money going towards? What was the justification for this hike?
Well, New Jersey Transit, they've had these big budget deficits, and so they needed to fill that hole. And they hadn't raised their fares in a few years, and they felt that it was time to turn to the riders and say, look, we need you guys to also help out with this budget shortfall.
It's interesting. We can't talk to you about this story without bringing in congestion pricing, because it's actually mentioned in your story. Here's what Governor Murphy said. The service has been unacceptable. This is a unanimous opinion. I think that's fair.
That was actually Murphy who said that.
Yeah, Governor Murphy.
Governor Murphy. I'm sorry, I thought you said Hochul.
No, sorry, Governor Murphy is who I meant. The reason I bring him up is because he was very against congestion pricing.
He was.
And you also write that this got worse for the transit systems when congestion pricing was moved away, or canceled indefinitely or postponed indefinitely. How do we thread that needle?
Yeah, they all rely on each other, because some people are, they're getting off a New Jersey Transit and then they're getting on a New York City subway. And so people are using these different systems, and with the MTA, which runs the New York City subway system, what was going to happen was congestion pricing was going to start. That was going to bring in about $1 billion a year, and then the MTA was going to bond off of that to give them $15 billion over a series of years, and they could just do so much with investment in their infrastructure. They would update signals. Some of these subway signals are from the 1930s, so update those, and that'll help the subways run faster and to decrease delays. They were going to add more elevators into a lot of subway stations, and that really helps out people. And, we
also
all
people with
sometimes
kids
have
who are
to
pushing
use,
a stroller, or if you go grocery shopping. I mean, it's not just people who use wheelchairs.
Maybe you have a sports injury.
Yeah.
So temporarily you can't do stairs for a while. So it's not just, elevators aren't just for somebody who's above a certain age. It affects all of us at some point in our lives. So that was a very big issue. And and also this money would have gone towards extending the 2nd Avenue subway up into Harlem. Yeah. So going from 96th Street to Harlem. So that was really going to add a subway system to an area that desperately needs it. And now the money's not coming in for now. Hochul calls it an indefinite pause. So we'll see what happens with that. But right now, that means less money going to the subways.
We only have about 30 to 45 seconds left with you, but going back to the New Jersey, New York commute, which I care very deeply about, I mean, what does the immediate future look like? Does this possibly get better this summer, or are we just going to have to deal with this?
Well, right now, what Amtrak and New Jersey Transit are doing is they're pledging that they're going to work together now.
Beautiful.
Before Yes, it's high time. Before they were really pointing fingers at each other, claiming that the other organization was at fault here, but apparently they're going to stop doing that, and they're going to investigate their infrastructure, really try to get to the root problem of how to solve it. Apparently there's these overhead wires that have been getting into trouble. They've been falling down.
Don't touch them.
Don't touch the overhead wires. Leave them alone. But that excessive heat is really putting a strain on the infrastructure. So we're hoping that those investigations help resolve this.
Michelle Caskey, she covers transportation for Bloomberg News here in our Bloomberg Interactive Broker Studio. Her story among the most read on the terminal. Check it out at Bloomberg.com, and of course, always on the Bloomberg terminal. Up next, we're going to talk AI with the CMO and Chief Solutions Officer of SAP. This is Bloomberg.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ, and yes, the NASDAQ 100 index all in the green. Little changed on the S&P right now, up by about 0.1%. The Dow also just about flat on the day, higher by 4 points now, while NASDAQ is up 113, up by about 0.6%. 10-year yield, 4.47%, with a 2-year that's yielding 4.77%. Spot gold right now up $3.50 the ounce to $23.30, up by about 0.1%. And West Texas Intermediate crude, 83.44 a barrel, up by 2.3%. Wall Street, meanwhile, looking ahead to Friday morning's jobs report and what it may mean for the timing of Federal Reserve rate cuts. Cameron Dawson is Chief Investment Officer at New Edge Wealth.
We're already at the Fed's target for this year at 4.0%. If that continues to creep higher, and if you continue to see this moderation in the PCE, it does give the Fed the degrees of freedom to at least do one rate cut, maybe 2 rate cuts this year. But then the question is, what happens in 2025 if they start to ease policy, fiscal remains stimulative, and then we start thinking about the Republican sweep?
Cameron Dawson of New Edge Wealth. Chewy shares are lower after an initial move higher earlier in the session. This after Keith Gill disclosed a 6.6% passive stake in the online pet food and product retailer. Gill, who operates under the moniker of Roaring Kitty, shot to fame in 2021 as he rallied retail traders around video game store GameStop. GameStop right now down 4.6%, Chewy down 6.4%. Recapping, S&P higher by 7, up 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Really do appreciate it. Workers fearing that their employers could use AI to replace them might be right. That's according to data in a Federal Reserve Bank of Richmond report. Are you worried about this? Are you worried about this?
You know, if we go to
was my AI voice.
24/7 trading, we're going to need a lot more manpower. So, on the financial media side.
Yeah, AI power.
Yeah.
Well, okay, here's some details from that survey. We're Bloomberg, we like the numbers here. In a survey conducted earlier this month of firms that have used AI since early 2022 in the Richmond region, 45% said they were automating tasks to reduce staffing and labor costs.
I mean, it makes a lot of sense that businesses would be trying to do this. You think about all the fantastic applications of AI, that's a double-edged sword.
Okay, well, let's talk about some of those applications of AI with Julia White. She's Chief Marketing and Solutions Officer. She joins us from Seattle. Julia, good to see you. We heard a speech on Friday from Richmond Fed President Thomas Barkin. He said, quote, "We may well be seeing a move up in productivity, driven perhaps by automation or even AI." What are you doing at SAP right now in terms of making sure that your customers are more productive as a result of AI?
Yeah, certainly top of mind for us, and great to be back. Thanks for having me. As we think about how we infuse AI across all of the applications we provide enterprise customers, whether it's finance, procurement, HR, sales services, we are looking at ways we can use it to help people be more efficient, more productive in their work. We haven't seen a change in like the workforce around it, but certainly how they can be more productive and focus on the right things for sure.
And that's so interesting. I mean, it feels like at this point, a lot of the conversations about where AI can be useful, it seems like both, you know, when it comes to the investment landscape, obviously when it comes to your business and when it comes to other industries, most of these conversations center around just increasing productivity. That seems to be where a lot of the conversations are centered.
Yeah, those are the early results that are probably easiest to see immediately, like, you know, helping people with their HR process, creating goals, evaluating, having meaningful employee conversations as an example of productivity. But we're actually looking at more hard dollar savings too. For example, we've applied AI to warehousing and logistics use cases, and we're seeing people be able to decide which inventory goes where in which order. And so far, again, early, but still already seeing about $1 million savings per warehouse. And most of our customers have a dozen or more warehouses. So also looking for like efficiency and cost savings, not just productivity gains.
Where exactly are those savings coming from? That $1 million, where is it being saved?
Because we're getting the right inventory in the right place.
So it's all inventory management?
In that case, it is about distribution, but also getting trucks in and out faster. So just about efficiency of the fleet, and that gets into fuel costs, that gets into moving around and moving inventory to the different places that didn't need it originally.
So is it essentially just in time inventory, like on steroids?
Yeah, and helping it, yes, and be able to, right now, some of it's even still a manual process, right? So now we can make AI have a much more automated, so people aren't looking through physical bill of lading, but literally automating it and saying this over there, the rest of it to the next place.
And I guess sort of implied in Tim's question is, when you think about all the money being saved, how much of that money is coming from the fact that you have to pay less people? Because you take a look at that Richmond Fed survey that Tim cited, why businesses turn to AI, 45% said staffing costs, for example.
Well, and also staffing gaps too, of helping. We see a shortage in many places as well. So giving people the ability to do more with what they do have. I think both of those things are true.
Interesting. Okay. You know, it's interesting. I look at SAP and it's having shares are up this year. It's having a really good year as opposed to some of the other software as a service companies. It's up more than 28% so far this year. So outperforming the S&P 500 and NASDAQ 100. I'm talking about ADRs, I should note, of SAP. Why do you think, in your opinion, has SAP not suffered the same fate as some of the other software providers in a year where we're seeing IT decision makers move their budgets from software to hardware?
Yeah, well, I think we've seen people move budget to AI in a big way, where I think SAP is benefiting some of that. I think about the systems we build are pretty long-term, so we're a little bit less impacted by short-term kind of monetary change or changes around the economy. Because think about running your finances, running your HR, running your logistics and supply chain. Those need to continue and get more efficient. And I think we've shifted very quickly to put a lot of AI investment across that whole portfolio. And so unlocking new capabilities rather than people feeling like I have to go build AI separately or taking the AI budget and putting it elsewhere. So I think we brought that together and consolidated it around our solution areas.
Let's talk about some of your capabilities that you have over at SAP. You announced recently you're expanding integration of your own generative AI co-pilot, pronounced Joule. I hope I'm saying the name correctly. To me, it sounds like a woman, but
you can always ask the chatbot how to say the name.
Yeah, dear chatbot,
yeah.
What's your name? But give us an overview of Joule and how Joule is, different from other of the generative AI sort of co-pilots that are on the market right now.
Yeah, so Joule is the capability that's now built in across SAP solution. Again, whether it's finance, HR, procurement. And the great thing about Joule, because it is integrated across the whole portfolio of solutions, you can now engage and ask a question about, does my HR policy and my travel policy, how do those intersect? Or what about my procurement policies and my debt collection? How should I get more insight? So it's giving you that X-ray vision across those business processes, where today the systems are largely within their own silos. So the Joule capability gives you, kind of connects those dots across that whole set of data and ecosystem.
Does that end up?
Well,
go ahead.
We also just announced too, we're going to be kind of industry first, integrating in a very seamless way our Joule Copilot and Microsoft 365 Copilot.
So how does that work? How do you integrate those
together? Yeah, so think about it's underlying integrating from the request and the prompt, and then the data handoff between the two. So I'm running a virtual team in Microsoft 365 Teams, and I need to bring in a new subject matter expert. I can flip over and ask Joule to find the right subject matter expert out of SAP SuccessFactors HR system, and then invite them to that team. So the handoff from a user perspective feels very seamless, but it's actually two different co-pilots working on their behalf.
And talk to us a little bit about some of the partners you have. Of course, you just mentioned one of them, but how do partnerships actually work in this ecosystem? What benefit do those bring necessarily?
We certainly partner with a wide range of large language model providers so that both our applications can always have the best based on what the use case is. But on top of that, in a partnership with NVIDIA as example of creating really robust developer experiences. So if you're trying to develop extensions for SAP solutions, you're kind of super powered from that perspective, or if I'm a consultant trying to deploy SAP solutions, the NVIDIA technology helping power that. As I already mentioned, the Microsoft 365 Copilot and Joule integration, or even with Google around rethinking and reinventing supply chain and bringing more AI to bear into the supply chain processes.
Let's say you're on with us 2 years from now, Julia. What's the conversation we're having?
I think we'll still be having the conversation around responsible and ethical AI. I think that's super important, and that will continue to be important in 2 years. But I think it's going to be more just assumed and understood in the way we work. I think about a few years ago when cloud was born, and there was all this hand-wringing about IT losing jobs and what's going to happen. And I think in 2 years, we'll work through there is going to be a lot of skill change. There's going to be a lot of what people functionally do, but there's going to still be lots of work to be done.
Julia White, Chief Marketing and Solutions Officer over at SAP, joining us from Seattle. Julia, good to have you back on with us. Do appreciate you taking the time.
Absolutely.
We are less than a half hour away from the close of equity trading on this Monday. We got markets mixed, Katie.
Markets mixed, pretty boring, I have to say. The S&P 500. If you're
Way to sell it.
If you're an optimist, 0.07% is higher, but I'm going to go ahead and call that unchanged. Volume actually is pretty on par with the last several days.
That's surprising.
It might be the last day this week you see that, though.
You don't think Wednesday, half day, we'll see this?
I don't think so. I know we get the beige book, a lot of eyeballs on that beige book potentially.
2 o'clock on Wednesday. Markets will be closed, though.
They will. Yeah, it's an early close.
What happens Friday?
Friday, we have a jobs report.
Yeah, payrolls report.
You know, you're going to have to check your phone from the beach or at least log onto your laptop.
You're not going to be here.
I'm not going to be here.
What are you going to be doing at 8:30?
I'm going to be watching my Bloomberg television and radio colleagues fondly to see their analysis of the jobs numbers.
That's what I like to hear. I will be here.
Right.
I don't think I will be providing analysis at that time. A little later, 2 o'clock, I'll be providing analysis. A big thank you to Julia White, Chief Marketing and Solutions Officer over at SAP. Coming up next, we drive you to the close, but first up, a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. The Democratic National Convention in Chicago starts on August 19th. Bloomberg News has just learned the Democratic National Committee is actually considering formally nominating Joe Biden as early as mid-July to ensure the president is on the November ballots. U.S. Supreme Court ruled Donald Trump has some immunity from criminal charges for trying to reverse the 2020 election results. Harold Krent is a professor of law at Chicago Kent College of Law. He talked with Bloomberg Intelligence about what this means for Donald Trump's upcoming trials.
But that means delay, it means time, and so there will be very likely no kind of trial until after the election.
The justices voted 6-3 along ideological lines and said a federal appeals court was too categorical in rejecting Trump's immunity arguments. The majority ordered the lower courts to revisit the case. Now, besides the presidential immunity decision, the Supreme Court also wrapped up its term with more key rulings, couple more. Bloomberg's Nathan Hager has that part of the story from Washington.
In a 6-3 vote, the justices ruled that a convenience store in North Dakota can sue over debit card swipe fees that were imposed more than a decade ago because the business opened within the 6-year statute of limitations. This decision could make a raft of long-standing federal rules newly vulnerable under the Federal Administrative Procedure Act. And in a unanimous decision, the High Court sent a pair of cases related to new social media laws in Texas and Florida back to lower courts. The justices say there's not enough information on how the laws would apply to companies like Google and Meta Platforms. In Washington, I'm Nathan Hager, Bloomberg Radio.
And record-breaking Hurricane Beryl is a Category 4 hurricane, the first one ever to form this early in the season. It is moving through the Caribbean, appears to be headed for Mexico. For now, it looks like it will miss the United States. We're watching it. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long. Here at Bloomberg, we have got the Dow, the S&P, NASDAQ all advancing right now. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. The Dow and S&P are quiet today, while the NASDAQ outperforms. The Dow is currently up 18 points. S&Ps are higher by 7, while NASDAQ gains 0.7%. The U.S. 10-year yield at 4.48%. Gold is up 3. Oil is also in the green. And Bitcoin, that's higher by 2.4%. Among the main 11 S&P sectors, leaders were tech and consumer discretionary. Materials and industrials were under pressure. And leaders to the upside in the Dow, Merck and Boeing, while UNH and Home Depot led to the downside. In deal news, Boeing is buying Spirit Aerosystems for $4.7 billion. And wrapping things up, J.P. Morgan rose to a record high. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, look at that. 18 minutes to go.
Wow, this is just flying by, Tim.
That's what happens when you join us on Bloomberg Business Week, Katie Greifeld, and you're not napping in the afternoon like you usually do.
Yeah,
thanks for not napping, by the way.
I wouldn't miss it for the world. I got the call and I said yes.
Yeah, and tomorrow too, right?
Yes.
Okay.
And then that's it. Then I'm going on vacation.
Okay, that's
that
it.
was enough of that.
You got the call, you said yes to 2 days, and then you said no to the other 2 days. Hey, I'm really curious what Walter Todd is watching. He's president and chief investment officer over at Greenwood Capital Associates. They've got $1.6 billion in assets under management. Walter joins us from Greenwood, South Carolina. Walter, Katie called this a boring day.
Yeah.
You know what? If the S&P 500 so far this year is up almost 15%, you got to have some boring days in there. Walter, what are you watching?
Yeah, well, I feel like Phil Connors and Groundhog Day here. Tech outperforming, NVIDIA up, everything else underperforming. It's kind of been the story.
All right, Katie's never seen Groundhog Day, so.
But I was nodding along like I was there with you. So please continue.
You got to watch it, Katie. It's a classic.
It's a good one.
But nevertheless, I feel like I'm reliving the same day a little bit this year and really going back to 2023. So, yeah, we're obviously watching, the same thing over and over again, but looking forward to the payroll report on Friday, earnings in a couple of weeks. Of course, Powell speaks tomorrow, so that could be market moving. There's a couple of things on the radar there.
Which one's the potentially most impactful?
Yeah, I think payrolls are probably the biggest one because for us, we think that's really going to be the driver for the Fed potentially acting on cutting rates. I think everybody's focused on inflation, but I think the real driver for Powell will be if the labor market continues to kind of soften up, and we've seen some evidence of that with the disconnect between the payroll report and the household report really showing divergent signs in the labor market, one showing growth, one showing losses of jobs. So we'll be watching that carefully. And the Fed gets another 2 payroll reports beyond this one before the September meeting. So we think that's when they could potentially go if they decide to.
Walter, I have a stat for you. I've been thinking about it all day, that if you think about what we saw in June from the S&P 500, this comes courtesy of producer Dan Curtis, but the S&P 500 in June moved an average of 0.3% every day. That makes it the quietest month since the pandemic started. And I'm wondering, when you think about those really minuscule moves that we're seeing near all-time highs on the equity benchmarks, does that just speak to this being a summer lull, or do you see that basically as volatility coiling up here?
It could be a little of both, right? I mean, I always get nervous when you have these very quiet episodes, elongated episodes in the market. I think it takes me back to 2018 and that Volmageddon episode in February of 2018. So we've been 340 days, trading days without a 2% correction. That's the third longest streak since 2004. So you feel like we're kind of building up. You don't know what the catalyst will be in terms of what causes the volatility, but you feel like it's out there kind of waiting. So it does make me a little bit nervous heading into this payroll report on Friday.
And so what do you do with that sort of nervousness, that caution? I mean, do you try to just look through it, or do you maybe take a more defensive tilt in your portfolio as we head into what are normally these lower liquidity months?
Yeah, I mean, July is typically a good seasonal period for the stock market, but we've got some unique circumstances here with the election and the debate last week and everything that's going on with that. From our perspective, you try not to get too caught up in the day to day, but to the extent we have new money coming in, which we're fortunate to do with new accounts opening up, et cetera, we're really looking for opportunities, not necessarily fully investing those funds on day one. And looking for some volatility to hit, especially heading into earnings season, that will give us a chance to buy companies that we have a good fundamental long-term outlook for.
What do you like right now?
Yeah, so we're trying to look away from the shiny objects in the market right now. And look
so that means look away from NVIDIA?
Yeah, look away from the blinding sun of NVIDIA and look for opportunities, maybe other opportunities in technology and then beyond technology. Looking at healthcare, we think this is a very unloved sector given the flows of the ETFs out of that area and the relative performance to the market over the past 12 to 18 months has been pretty abysmal. So we think that's a good kind of contrarian candidate there. We think energy's very attractive on a valuation basis. NVIDIA's market weight's about twice the entire energy sector right now. I think they need energy to make chips, the last I checked. But so those are some of the areas that we like. But we do have some exposure to some of the bigger names in the market, just not NVIDIA at the moment.
Let's talk a little bit more about sort of those contrarian picks that you have, healthcare included. Healthcare and energy just feel like two sectors that make a lot of sense. People tell me about how they're bullish on those sectors and the logic really holds water. But then you take a look, like you said, at the relative performance, for example, the ETF flows, and just can't seem to get off the ground. So when you think about those unloved sectors that make sense as a contrarian play, what would be the catalyst here?
That's the golden question. I think you got to have patience, right? You got to have a little bit of longer term view with those, and it's hard to point to a specific catalyst other than the fact that when flows and sentiment move too far in one direction, whether that's positively into technology and semiconductors or whether it's negatively, out of healthcare, you tend to get to these inflection points that flip the other way. And so that's what we kind of anticipate from the energy perspective. There's a lot of potential catalysts out there, unfortunately, given the geopolitical environment that we're in, that could push oil higher and therefore, kind of catalyze those stocks.
And Walter, on July 1st, I mean, November feels a far way away, but we probably should talk about politics in some context here. It's interesting. I mean, you saw Morgan Stanley out with a note talking about what the Trump trade in bonds might look like. They think that adds into a yield curve steepener. But how are you thinking about politics as we head into November? Is this basically something that you try to ignore, or is this something that's actually worth positioning around?
Yeah, you try to, for us at least, we try not to make huge swings in the portfolio based on the outcome of elections. However, we have looked at, courtesy of our friends at Strategas, looked at the performance post the election in 2016 to kind of see how the market played there. And we really actually saw some evidence of that on Friday with regional banks specifically. So regional banks in the second half of 2016 were up 45% as a function of Trump being elected. And so we did see some upward move on Friday post that debate. So I think there's some things around the edges you could position for, but I think, again, given the uncertainty, and don't forget about Congress, we're talking about the president, that's the focus understandably, but we also have Congress up for grabs as well. As long as we have a divided government, that's probably a good thing for markets if you look historically as well.
Hey, we only have 20 seconds left. Give us one place you don't want to be.
NVIDIA.
Really? Okay, 10 seconds. Why? I can't leave that.
It's the size of the UK stock market, the German stock market, the French stock market by itself. You're paying peak multiples for peak earnings, in our opinion. I know it's a very out of consensus call, but that's our view. There are other more attractive areas relative in the market.
I love it when people go against the grain. Thanks for joining us, and appreciate the calls. That's Walter Todd, President and Chief Investment Officer over at Greenwood Capital Associates, $1.6 billion in assets under management, joining us from Greenwood, South Carolina on this Monday afternoon. Fed minutes on Tuesday.
Fed minutes.
Wednesday, I mean. Not the beige book. We want to clarify.
So, once again, Fed minutes Wednesday. It's not the beige book.
We're not on vacation yet, Katie.
No.
This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got Boeing and Spirit Aerosystems both trading higher. Boeing has agreed to buy back Spirit Aerosystems Holdings for $37.25 a share in an all-stock deal that values the supplier at $4.7 billion, unwinding a 2-decade separation as the embattled playmaker tries to fix its manufacturing defects. And right now we do have shares of Spirit Aerosystems up by 3.1%, and Boeing is up now by 2.75%. So an update for both companies. George Ferguson covers the aerospace industry for Bloomberg Intelligence.
This is just going to give them an opportunity to streamline the manufacture of the Boeing 737. That's the big money maker for the company. It generates a lot of the cash flow, a lot of the profits. And so, really the path for the recovery for Boeing flows through getting MAX 737 production and deliveries higher, up into the 40s and 50s at least, and with a view towards even better numbers than that.
George Ferguson of Bloomberg Intelligence again. Boeing up 2.8%, Spirit Aerosystems up 3.1%. Tesla is expected to report another quarter of weaker sales tomorrow. Tesla shares ahead of that report up 6.4%. Analysts are estimating that the car maker will report that it handed over 441,000 electric vehicles in the second quarter. That is a 5.4% drop from a year ago. It would be the second consecutive quarterly decline. Again, we've got shares of Tesla up now by 6.4%. Those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week on this Monday afternoon, July 1st, the first trading day of the month of the third quarter. Can you believe we're there?
The first quarter. Oh, no, the third quarter, second half.
Yeah.
I got confused because
a lot of numbers I'm throwing out there, Katie.
Whoa.
Beige book.
Yeah, but it is July 1st. It was a really solid first half to the year. A very narrow but still very solid first half. And the question becomes, do we hit a summer air pocket? Do we see leadership broaden out, or do we see sort of a catch down trade where tech comes back to the rest of the market?
Which one do we see?
I don't know.
Oh, okay.
I've just been asking people that. I just asked the questions.
I think I agree with you, and I just asked you a question in response.
We could just do this for 2 minutes.
I have no idea what happens. Hey, what happens to the Boston Celtics?
You know, that's a great question. A story just crossed in the past hour or so. The Boston Celtics to be put up for sale after winning the NBA title. The team's ownership group, the Boston Basketball Partners LLC, has decided to sell the franchise for estate and family planning considerations. This is according to a Celtics statement. Now, the owners expect to sell a majority interest this year or early 2025, with the remainder closing in 2028. Definitely interesting to see this cross.
Yeah, they're going on sale at a time of surging valuations for pro sports teams. Listen to this. More and more franchises have sold minority stakes or offered up control. In the past year, the NBA alone has seen 3 franchisees change hands. You got the Phoenix Suns, the Charlotte Hornets, and the Dallas Mavericks, all going for $3 billion or more.
Wow.
Supply and demand. It's the ultimate supply constrained sort of thing, right?
I feel like these, these pro sports teams are becoming more and more of an asset class, which is really fascinating. Sportico values the Celtics at $5.1 billion. That is the 4th highest in the league. And the current ownership group bought the team for $360 million back in 2002. So really, this asset has performed quite well for them.
Just calculating the returns.
There you go.
Comes back very good. Yeah. If they get that valuation. Right?
Yeah.
That's a Sportico valuation, so we'll see.
We'll see. I don't know if the people who are sniffing around for this are worried about things like high interest rates and frothy valuations.
We'll see.
Yeah.
Interesting. Okay. So if you're looking for a team, you got $5 billion.
Yeah.
There's one you
burning
can have.
a hole in my pocket.
Yeah. Hey, we're getting to the closing bell. We're going to be joined by our TV team for our cross-platform coverage. The closing bell starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
We're about 2 minutes away from the end of the trading day. Scarlett Fu and Alex Steele here, and here to help you take us through the closing bell with a global simulcast. We're joined now by Tim Stenevec and Katie Greifeld, and of course, we bring together the best of Bloomberg Television, Bloomberg Radio, and YouTube audiences worldwide. As we parse through the most important parts of this trading day, was there an important part of this trading day today, Tim?
There wasn't an important part of the trading day, but I think it's actually an important week, even though it's a holiday-shortened trading week, because we've got a lot of economic data. We got a payrolls report coming on Friday. We get those Fed minutes on Wednesday. We get JOLTS tomorrow, Katie. So, and as you were pointing out earlier, volume wasn't actually lower than the 20-day average. So we're actually seeing a little bit of action.
I have to applaud you for making a lot out of nothing because, the jobs report obviously is top tier. And when it comes to volume, I have to imagine this is going to be maybe the last day that we see above average volume.
Fed minutes are not nothing.
They're pretty close to nothing. They're pretty dated.
No, you guys are missing the move. It was the bond market. You had a
Well, I
nice
know, but we don't wanna
juicy
take-
move in the back end. You didn't want to take my thunder.
I don't want to take your thunder. Yeah.
And if you just look at it intraday, it was so interesting. We had some buying coming across right as that ISM manufacturing data hit that was a little weaker. We're going to talk about that later on in the next hour. And then boom, you got the Supreme Court decision on Trump immunity, and then bond yields had a pretty solid spike higher.
Yeah, it's not every day
This
that
is the
you see
thunder we
8
didn't
basis
want to
point
take
move.
away, Alex.
Yeah.
Oh,
Well,
fine.
you know, we're going to get to the closing numbers for the indexes, for the equity indexes, and then we're going to get to recap everything in the bond market once again, because it's a big move.
All right, thank you, Scarlett, for validating me. We are coming up to the close. Oh, there we go. The closing bells. We are off to the races. The first day of the second half of 2024. The Dow Jones Industrial Average up about 0.1%, up 43 points. The S&P 500 up 0.3%, up about 13 points. We're settling out here, but the Nasdaq is up by 0.8%, 146 points, and there you kind of settle out on this Monday.
All right, peeling back one of the layers of the S&P 500, we did see 126 stocks move higher. We had 375 stocks move lower, so speaks to some of those larger cap names, certainly powering the index higher by close to 0.3%.
All right, let's take a look at the IMAP and show you which sectors are really leading and lagging behind. The leaders here, tech, up by 1.3%, consumer discretionary up by 0.75%. That's really Tesla, and financials slightly higher. But there were 3 indexes or industries that did finish the day with at least 1% declines. We're talking materials, industrials, and REITs.
All right, you got the decliners today, Katie, so I get to do the gainers. When Carol's out, I get to do the gainers. I want to talk about I want to talk about shares of Tesla.
That was mean.
That was mean. Higher today by more than 6%. They jumped after we saw Chinese peers NIO and Li Auto report vehicle delivery data for the month of June that showed increases versus the same period a year ago. So some bullish news there. The move marks Tesla's 5th straight day of gains. It would be the longest winning streak in almost a year. We are going to get Tesla sales data a little bit later in the week when we'll sort of see if the company delivered vehicles that are higher than they were last year. That's certainly an important metric for investors to watch. Also, earlier today, Wells Fargo added Tesla to its tactical ideas list for the 3rd quarter. They said that the car maker's delivery growth looks set to decline. Okay. Shares of Apple also higher on this day today. It turns out that there's a report over at Apple Insider that's getting quite a bit of attention. Shares higher by close to 3%. Apple Insider reporting that the company has increased its order with TSMC on chips for the next iPhone, so certainly a bullish indicator there. Apple Insider reporting that the company's getting ready to sell from 90 to 100 million iPhone 16s. It's higher than the order volume of the previous version of the iPhone. And finally, checking out shares of Boeing. A lot of Boeing news today. Shares ended up finishing the day higher by 2.6%. The company agreed to buy back Spirit Aerosystems for $37.25 a share. It's an all-stock deal. It values Spirit at $4.7 billion. After 2 decades of being separate companies, they're actually getting back together. This all in an attempt to fix Boeing's manufacturing defects. Also, the U.S. Justice Department planning to charge Boeing with criminal fraud after finding the company violated a 2021 deferred prosecution agreement tied to 2 previous fatal crashes. That not sending shares of the company lower. George Ferguson over at Bloomberg Intelligence was on our program a little earlier. He said that it looks like that some of the challenges of getting to a better place are starting to get fixed, Katie.
All right, let's take a look at some of the decliners. And I wanted to highlight 2 travel names, 2 cruise names in particular. These are your 2 biggest losers in the S&P 500 on this pretty quiet day. Norwegian Cruise Lines down almost 6%. Carnival also down about 5.4%. This, as Hurricane Beryl, and I hope I said that right, is rushing towards the Caribbean. So this, of course, is the strongest ever June hurricane, meaning it's the earliest storm to reach Category 4. And you're really seeing that reflected in a lot of the travel stocks today, particularly in the cruises. So pretty bad day for Norwegian and Carnival, of course. And then had to talk about Chewy. Chewy, it actually was a gainer, and then it pretty quickly turned into a decliner. It's going to finish the day down almost 7% or so. I think we all know the story by now, but basically Keith Gill, Roaring Kitty, of course, of GameStop fame, he disclosed a 6.6 passive stake in Chewy. This was according to a disclosure with the SEC. He owns roughly 9 million Class A shares. Initially, that provided a pop, that, formal disclosure, but that quickly turned into actually a pretty bad day for Chewy.
Fair enough. That was good. I thought you guys both did well. I thought
Thank
you did
you.
a great job with gainers. Just putting it out there.
What's going on with yields?
Yields. Okay,
Yeah.
they're doing stuff. You guys
Yeah.
are all like, nothing happened today, but they definitely did in the back end. So front end, sure, nothing really happened, but the back end had some nice movement here, up by about 8 basis points on the 20-year, and then the 10-year up by 7 basis points. So MLive had a nice piece out that said if you hit 4.5% on the 10-year, you're going to have some buying come in as a sell-off kind of reaches its max, and 4.5% becomes kind of appealing. So now I'm kind of watching that level as we have jobs on Friday, we have the minutes on Wednesday. So I think that could be quite interesting.
All right. Hey, I'm just want to do a quick correction that Wells Fargo put Tesla on its tactical ideas as a best short. So,
clarification. Thank
I want
you.
to
That
thank
makes
Thomas
sense.
Thornton for getting in touch over the IB for pointing that
You
out. I
had done
appreciate
so
that, Thomas.
well
I know. So I did mess it up. Hey,
Oh, that sucks. Katie did it to you, man. I think that was just Katie.
It is Katie. Hey, I wanted to talk a little bit about Taylor Swift. Did you guys go to the Eras tour?
No.
Yeah. Neither did we.
My daughter's still asking to go, and we
Is
tried
it-
to tell her, be like, look, spending 10 grand to go to Poland to see a concert isn't something we can do.
Yeah, but think about how cheap things will be once you get over there.
That's adding it all in there. But
Okay.
anyway.
Hey, well, the reason we're talking about this is because the company that actually builds and designs the stages, it's called Tate. It was started back in 1978. It's an engineering firm, and they don't just do the Eras tour. They don't just do Taylor Swift shows, but they are exploring a potential sale, according to people with knowledge of the matter, and it could value them, Katie, at over $1 billion.
You know, and Taylor Swift is a repeat customer here. That she also used them for her Reputation tour back in 2018. They also did Rihanna's Super Bowl halftime show and Beyonce's Renaissance World Tour in 2023. You have to think that that's all really great advertising if you build stages to have, some of the most famous people in the world on your stages.
I agree totally, but they're doing this, or they're talking about potentially going public right around the Taylor Swift tour. So it's a Taylor halo effect.
It's
right?
a peak Tay-Tay, is that?
Peak Tay-Tay, maybe.
Is that what that is? I mean, I feel like we've been saying that for a while.
Could very well be.
Here's another story that, guys, I just loved. So Inca, if I'm saying that right, Investments, is the investment arm of the largest IKEA retailer. And apparently, they're taking a stake in a new tower going up on Manhattan's Fifth Avenue. It's 570 Fifth Avenue. It's around 47th and Fifth Avenue. It's a huge tower, and it's going to have, quote, IKEA customer meeting point. I have zero idea what that is.
I just want to make a joke about building the tower with the directions that you get from IKEA.
That's pretty good.
That's all
It's
I
not
want to
gonna
do
be
right
like
now.
the Billy
If you have any
bookshelf.
questions, you call them up when you're putting it together.
Oh my God! Can you imagine that booklet that they hand you? And
How thick would that be?
The little things that you hammer in and you crying
The
because
little
it's so
tool.
hard.
My reaction reading this story was, do we need an IKEA on Fifth Avenue? I mean, these customer meeting points, maybe that implies that it's not just the factory or, the storefront where those enormous, just tunnels of hallways of IKEA furniture. Clearly, I have some negative memories there, but is that what you need right on Fifth Avenue?
But if you
know.
don't have the actual full showroom, then what are you really showing people?
Unless
the
there is a full
truncated-
showroom. Unless it is that.
Yeah, well, that's the question. I mean, Katie's asking whether we need it, but if you don't have that and you just have a truncated version of the showroom, I think they did that near our office. It's not the full IKEA experience. You got to go in there and be prepared to spend the whole day.
What if that's
maybe
an
take a nap
unpleasant
on the bed and get some Swedish meatballs.
And if your relationship isn't testing and on the line when you're in IKEA, what's the point? Because that's the only way you know if you're set.
I'm glad you went there, Alex.
Yeah, not even the meatballs can help that.
Are you guys going to be here tomorrow?
We are.
Yeah, we are.
Good news.
I'm also here, which is huge.
Great. We'll be back together tomorrow. That is going to do it for the Closing Bell. It's our cross-platform coverage of the market close on Bloomberg TV and radio, Bloomberg Originals and YouTube. Meantime, catch us tomorrow, same time and same place.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. That's Katie Greifeld in for Carol Masser this afternoon. I'm Tim Stenevec. Katie, I don't know if you caught this story last week. Jensen Huang, the president and CEO, co-founder of NVIDIA, one of the wealthiest people in the
I've
world.
heard
I
of
think he's
him,
number
yeah.
13 on the Bloomberg billionaires list.
For sure.
He and his wife, Lori, have a foundation. They've got more than $8 billion of NVIDIA shares in it. But even that figure may underestimate the amount of charitable assets now that the couple has at its disposal. Documents show that a charity run by Charles Schwab controls an additional $4.4 billion of NVIDIA shares, at least some of which are held in a donor-advised fund for the Wongs and their foundation. The reason I'm talking about this is because of these DAFs, donor-advised funds. The IRS, back in the spring, held hearings on proposed changes to DAFs. And for more, to get an understanding of what exactly is going on, what could be at risk, and just to explain it all, we turn to Julia Healy, CEO over at United Charitable, which in their own words is a, quote, nonprofit that works closely with wealth advisors and their clients to increase a donor's ability to do more with their contributions while minimizing their tax liability through their donor-advised funds. Julia joins us from Washington, D.C. Julia, how are you?
Good. How are you?
We're doing pretty well, thanks. I think we got to start at the basics here with donor-advised funds. Not everybody knows exactly what they are, so explain for us.
Sure. A donor-advised fund is a charitable giving account. Think of that as simply a savings account that's already geared towards charitable giving. The great thing about a donor-advised funds is that once you donate into the account, that's when you get your charitable tax deduction. And then from there, you can wait a year to distribute to charity, or you can make distributions right away. But think of it as a charitable savings account. Okay, charitable savings account. Who are they good for? They're good for people that are either building their wealth or high net worth individuals who already have their legacy in place and they really want to continue it. They can replace private foundations in certain scenarios. I mean, it's such a flexible vehicle. Like, what are we talking about in terms of net worth? Like, who does it make sense for? So again, probably around the 5 million and under mark, right? So we have clients that start with us at 25,000. We have clients at 5 million. So how does someone like Jensen Huang, the founder of NVIDIA, find $4.4 billion in a donor-advised fund? And again, there's so many people out there that are using the donor-advised funds because nobody wants to deal with the private foundation and having to file all of your tax forms and having board of directors. With a donor-advised funds, you just become a project or an account of an existing charity. So I have run about 650 different donor-advised funds for all different clients. And again, there's no quarterly board reports. We vet the charities for them. You just make the recommendation and then we go out and do the work.
And Ken, for our audience that might not be familiar with donor-advised funds, I mean, how do they compare to other vehicles out there that do exist? If you could just compare and contrast here for us.
Sure. A donor-advised fund is really compared to a lot of the times to a private foundation. And so with a private foundation, you do have to do reporting, annual reporting, board reports, and you don't have the same tax deductibility, right? So private foundations have certain tax deductibility compared to donor-advised funds, which is a public charity, so you get all your public taxation rates. So the real advantage is you get, a higher tax deduction for the clients that choose to go with the donor-advised fund. And the distributions, though, are only to a 501c3, religious or educational institution in the United States. With a private foundation, you have more flexibility into paying expenses and paying salaries. With the donor-advised funds, you do not have that capability. So what's going on at the IRS level here when it comes to these, the potential changes that we could see? Yeah, so we're seeing that the regulations that could possibly be proposed would not allow financial advisors to be compensated for the management of the donor-advised funds. Why is that bad, in your opinion? Well, just because, in my opinion, if a financial advisor is advising an account on how to create a legacy, and we have a client, we have a family that's coming in and has decided to put $500,000, away, and they want to do distributions each year, but they only want to touch, the interest, not the principal, a financial advisor then needs to come up with the best investment strategy. Who at the charity would be able to do that? We need investment advisors in their professions to make sure that these accounts are growing and taken care of just like any other investment. How are they compensated right now? Management fees. How high are those fees? Like 75 basis points. I mean, we're not talking anything crazy.
And so the conversation that we're having now about potential regulation, potential changes, I mean, where did that originate from? And I mean, what's the potential timeline on any potential changes?
That's great, and I wish I had more information for you for that. They have not given us any potential changes. It took them quite a while to really come up with these regulations. So I'm hoping we'll see something, just because we would like to know too, but we're hoping we'll see something late this year, maybe next year. They haven't given us any kind of information around that.
How are you thinking about the election and who wins in November?
Ooh. In election years, people, whether your candidate wins or loses, people really seem to care about charity and the charities that they're giving to. So it's kind of an activation year, I call it, for me. Because we can see clients, whether they're happy about who's in office or they're not, they'll really react to it and they'll make sure that their dollars talk just as much, right? Their charitable dollars will go to the organizations that they think will help strengthen America.
Do you think that it will change based on who wins in terms of how much people donate? Like, is that on your radar at all?
It's not so much how people donate. I think it just depends what is going to be on each party's platform, whether they're going to go off tax regulations or stuff like that. That will make a difference.
Yeah.
But in general, more people are activated in election year. They care about the community that's around them. And it makes them very aware of the issues that are going on. So it makes people really activated and wanting to make the world a better place.
And Julia, I'm curious about demographics here. I mean, when we talk about philanthropic giving, et cetera, it sounds like a much older sort of person who's doing that. But what are we seeing among maybe folks who are less wealthy, who are earlier in their careers and their investment journeys? I'm talking about Gen Z, for example.
So probably my favorite generation thus far, which is because they're really wanting to match their donation dollars with their time, talent, and treasure. They don't just want to give a big check. They want to volunteer, or if they have accounting skills or social media skills, they want to help that nonprofit in a very specific way. So we see philanthropy changing a little bit in the sense that the next generations, they want to be much more involved. They really want to help. They want to work with companies that are philanthropic. So we're just incredibly excited to see the next generation.
What are the causes that they care about?
So we're seeing a lot of environmental education, but just anything that they feel that they create a community. And that's what I've noticed much more, is that they do care about the nonprofit social media accounts and what they're doing and what there's community. They're looking into all of that when they're making their donations.
I'm wondering about religious organizations. Is that something that falls into the purview of donor advised funds?
It does.
Are you seeing a shift there? Because we hear a lot about younger generations not being as interested in going to church or being part of organized religious community. And I know that does take up a significant portion of donations when you look at it net. What are you seeing? What are the patterns you're seeing?
Exactly what you said. We're seeing that becoming less and less. We're seeing human services organization take up more and more of the pie.
Really interesting stuff, Julia. Thanks so much for joining us. Do really appreciate it.
Absolutely.
That's Julia Healy, CEO over at United Charitable, works with donor advised funds. She joins us from Washington, D.C. All right, Katie, check of the markets, see how things ended on this Monday, the first trading day of the third quarter. First trading day of the second half.
That's very true. It was pretty narrow. I mean, once again, we ended with slight gains, about up 0.3% or so. Just 118 stocks in the S&P 500 managed to finish in the green. Obviously, more down than up, and that's really been the story of this first half. I mean, it's a very narrow cohort that has been leading these benchmark indices higher and higher.
It just powered higher by the likes of the mega cap tech stocks.
Fueled,
Meta
driven.
Platforms, NVIDIA, Microsoft.
Not Tesla.
Not Tesla.
Maybe that'll change.
Not Walgreens Boots Alliance, the worst performer in the S&P 500 in the first half of the year. Or over the last quarter, I should say. All right. Yeah, it's Bloomberg Business Week. Katie Greifeld in for Carol Massar. I'm Tim Stenevec. This is Bloomberg.
421 on Wall Street. We do check markets all day long at Bloomberg. An update for the Dow, S&P, NASDAQ. Not just an update for NASDAQ, but also a record. NASDAQ ending the day higher by 0.8%. Right now, NASDAQ is at 17,879. S&P advanced 14 points, now at 54.75, a gain of 0.3%. And the Dow up 50 points, up by 0.1%. The world's biggest bond market got hit today as traders weighed the potential economic implications of the November election after last week's presidential debate between Joe Biden and Donald Trump. 10-year, 4.46%. The 2-year, 4.75%. Gold up 0.2%, 23.31 the ounce, while West Texas Intermediate crude up 2.3%, 83.40 for a barrel of WTI. NVIDIA shares up 0.6% today, even as French antitrust regulators are preparing to charge NVIDIA over alleged anti-competitive practices. This according to Reuters, citing sources, but again, NVIDIA today up 0.6%. Recapping, NASDAQ at a record up 0.8%, S&P today up 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. We've got back with us Ori Levine, the co-founder of Waze. Remember, Google bought it more than a decade ago for $1.1 billion. Ori, also an investor and the first board member over at MoveIt. Intel bought that back in 2020 for $1 billion. He's also the author of Fall in Love with the Problem, Not the Solution, a handbook for entrepreneurs. Ori joins us from Toronto. Ori, good to see you. How are you?
Excellent. How are you?
We're doing well. It's good to have you back with us. Hey, before we get to how you're thinking about entrepreneurship right now, I do want to get an update from what you're hearing from your fellow members of the tech community in Israel, because you were back on with us in December a few months ago. And when you were last on with us then, it was about 2 months after the war started, and you talked about how it affected the tech community there. Obviously, a lot has happened since then. Just give us an update from what you're hearing, what you're seeing.
So to a certain extent, I would say that the scary part is that we get used to it, and we shouldn't have. But the reality is that the tech nation is back to normal. And, startup scene is as strong as it was before, and maybe even stronger. And so in that sense, I would say all goodness. The political situation is less.
Yeah, well, how is it back to normal? I mean, how does that work when folks are having to fight, when there's certainly still the threat? How is it normal?
Right. So to a certain extent, I would say most of the scene is outside of or further away from where the combat actually happens, right? And so in Tel Aviv and major cities, there is nearly no impact of the war anymore. And it's mainly up north and next to the Gaza Strip. And the number of people on military reserve is way smaller now. So at the end of the day, the impact on the startup scene is minimal at this phase.
How about fundraising? Is that back to normal when you think about the appetite of foreign investors to invest in?
That is probably the only thing that is not back to normal.
Interesting.
And so, and the reason is that, look, we hear about war and then we get scared and then we basically say, okay, we don't know, let's wait. Mm-hmm. And the wait is making it a little bit more complex for startups to raise new capital or for new funds to raise new capital and so forth. But at the end of the day, I think that and Israel always ended up to be stronger than before, right? So the more challenges that we have, we ended up to become even stronger and stronger and stronger. And so to a certain extent, I would say investing in Israeli startups today is a good idea.
Do you see fundraising ever getting back to levels seen before the war?
Definitely, yes. Right. So we look at 2021 in terms of investing in startups worldwide, right? And in particular in the US, and some will call that an hyperinflation valuations. And you ask yourself, is that going to come back? And then you look at the history and you realize that, wait a minute, in 2007, we say the same thing. And just before COVID, we say the same thing. And, in 1999, we say the same thing. And everything is coming back eventually.
Hey, I want to pivot a little bit and talk about startups and sort of what's exciting to you out there right now. So much of our attention has been focused on AI and this seemingly new, although not really new, but new of interest, I think, for a lot of people, layer of technology. A lot of your focus has been on sort of maps and transportation logistics with Waze and then with Move It. What's exciting to you right now in startups?
So look, at the end of the day, this is about solving problems. End of the day, if you think of a journey of a startup, then the purpose is only one, creating value. And the simplest way to create value is solve a problem. So therefore, if the problem is worth solving, then I would say this is probably something that excites me. I have 8 different active startups today, and each one of them is trying to solve a single problem. And some of them are, I would say, are going to be my 3rd and 4th unicorn, and but they're making significant progress. But generally speaking, each one of them is trying to follow the same philosophy of doing good and doing well, which basically means that, if they're successful, then the world will end up to become a better place.
And of course, you are the author of Fall in Love with the Problem, Not the Solution. I also see that on your shirt.
I was going to say,
that's a nice plug there. Maybe you could just elaborate a little bit more on what that actually means in practice for some of these startup founders and maybe startup investors as well, since obviously falling in love with a problem, it's a little bit unintuitive.
It's actually very intuitive, right? Because at the end of the day, if the journey is about value creation, the simplest way to create value is solve a problem, right? So you should start with the problem. Think of a problem, a big problem, something that is worth solving. And then ask yourself, so who has this problem? Now, if you happen to be the only person on the planet with this problem, you know what, I can recommend you a therapist. But if a lot of people have this problem,
thank you.
Then what you really want to do next is go and speak with those people and understand their perception of the problem, and only then go and build a solution. And the result is that the problem is going to serve as the North Star of your journey. And when you have a North Star, you're going to make less deviation from the course and more likely to become successful.
So what are the, go ahead.
In particular, the story that you are about to tell is going to be way more compelling. Just imagine that we will be here in 2007, just before I started Waze, and I will tell you I'm going to build an AI crowdsource-based navigation system, and you're going to say, oh yeah, very interesting, but you don't care. If I will tell you I'm going to help you to avoid traffic jams, then you do care. And when your customer cares, they want you to be successful. And if they want you to be successful, then they're going to help you to become successful. Now, you're right. I'm getting hundreds of emails a month from entrepreneurs. And in the last year, there was not even a single one that did not say AI. But I would say, in general, 95% of them will start with what they're doing. And I don't really care what you're doing. What I care is why you're doing that. What is the value that you're going to create? Why should I care as a user or a customer? And when you start your story there, it's going to be way more successful.
Give us an example of a couple of the 8 startups that you're involved with now that you say are finding solutions to problems. What are the problems that are out there that they're solving?
Pontera is helping Americans to retire richer, right? At the end of the day, if you think about most of the Americans, their retirement saving is through 401k plans, right? And if I would ask 100 people on the street, what do you invest in your 401k? Probably they don't know. I do know, by the way, in the default, whatever was the default when they joined. And the default is not a good idea, right? And the biggest problem is that your financial advisor is unable to help you with your 401k. And so Pontera have created a platform that allows financial advisors to manage your 401k and therefore brings way better results for you. C3 is helping tree growers to increase the yield. And this is pretty dramatic, right? And so in particular, if you think of citrus or sugarcane or eucalyptus or whatever, the ability to increase the yield through a system is actually pretty dramatic for them.
So we don't have much time left, and I have to talk to you about the 30-day test. Basically, one of your ways for hiring employees. 30 days doesn't seem like a long time to get a good sense of how someone will be as a long-term employee.
You are right in terms of the amount of feedback that I got around that. But let me try the following, right? I spoke with many entrepreneurs that their startup failed and asked them why, what happened? And about half told me the team was not right. And I kept on asking, okay, what do you mean the team was not right? And I heard, we had this guy not good enough and this guy not good enough. So that was the main reason. And then I asked them the most interesting question. When did you know that the team is not right? All of them told me within the first month.
Wow.
Within the first month. Now, in general, I would say this is always the same, right? So when you think of a small place and there is someone that does not fit, right? And I don't care if that someone does not fit because they're way underperforming or because they're complete jerks. I don't really care. Everyone knows. Everyone knows, and the CEO doesn't do anything. That's the nature of the beast. Now, the realization is that when I speak with people, I ask them, when do you know? All of them told me within the first month, even peers, right, or team members or team leaders or whatever it is. Then I set the rule and I basically say, and the rule is in order to force the decision, right? So every time that you hire someone new,
right,
what I want to do is mark your calendars for 30 days down the road and ask yourself one question. Knowing what I know today, would I hire this? Right, so forcing the hard decision.
Ori, we're going to have to leave it there, unfortunately. It's in Chapter 6 in his book, Fall in Love with the Problem, Not the Solution. Ori Levine, the co-founder of Waze, here on Bloomberg Business Week. Let's get a check on the latest world and national news. Amy Morris is in the Bloomberg 99.1 newsroom in D.C. Hey, Amy.
Hi, Tim. The Supreme Court extending the delay in the Washington criminal case against Donald Trump on charges he plotted to overturn the 2020 presidential election, all but ending prospects he could be tried before the November election. It's a historic ruling. The justice is saying for the first time, former presidents can be shielded from prosecution for at least some of what they did in the Oval Office. The justices have ordered lower courts to figure out how to apply the decision to Trump's case rather than do it themselves. Howard Krent is a professor of law at Chicago-Kent College of Law. He talked with Bloomberg Intelligence about guidance for what the lower courts need to do next.
The court's opinion is more detailed than we expected, and so the district court will have to thumb through and sort of get clues and hints. And the court did give a couple of examples in the opinion about what it considered to be worthy of absolute immunity and what it didn't.
Professor Harold Krent at Chicago-Kent College of Law on Bloomberg Intelligence. The Supreme Court also wrapped up its term with a couple other key rulings. We hear more from Bloomberg's Nathan Hager.
In a 6-3 vote, the justices ruled that a convenience store in North Dakota can sue over debit card swipe fees that were imposed more than a decade ago because the business opened within the 6-year statute of limitations. This decision could make a raft of long-standing federal rules newly vulnerable under the Federal Administrative Procedure Act. And in a unanimous decision, the High Court sent a pair of cases related to new social media laws in Texas and Florida back to lower courts. The justices say there's not enough information on how the laws would apply to companies like Google and Meta platforms. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Turned out to be an up day for the Dow, the S&P, NASDAQ, and yes, a record for NASDAQ, up today by 146 points, up 0.8%. Year to date, we've got NASDAQ returning 19.1%. Dow Industrials up 50, a gain of 0.1%. The S&P, to put it all in context, up 14 today, up 0.3%, with the year-to-date gain of 14.8%. 10-year 4.46%, the 2-year 4.75%. Spot gold today did advance by just about 0.2%, 23.31 for an ounce of the precious metal, while West Texas Intermediate crude up 2.3%, 83.45 for a barrel of WTI. First trading day of the second half, also a holiday shortened trading week. So what is the market's focus of attention right now? That question for Walter Todd, President and Chief Investment Officer at Greenwood Capital, who was a guest right here on Bloomberg Business Week.
Yeah, we're obviously watching, the same thing over and over again, but looking forward to the payroll report on Friday, earnings in a couple of weeks. Of course, Powell speaks tomorrow, so that could be market moving. There's a couple of things on the radar there.
Walter Todd of Greenwood Capital. Shares of NVIDIA up again today, up by 0.6%. That is French antitrust enforcers are preparing to charge NVIDIA with allegedly anti-competitive practices, that according to Reuters. Again, recapping, S&P up 14, up 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that. I'm learning how to do this.
It's almost 5 p.m.
I'm learning how to do this.
Yeah,
You know what I
good
need?
thing it's Friday.
You know what I need?
What?
A chicken sandwich.
Good idea.
Katie actually had a chicken sandwich for lunch.
It was just chicken nuggets.
Oh, chicken nuggets. I'm sorry.
But they were absolutely fried.
From?
Chick-fil-A.
Yeah, exactly.
Few steps from the door of the Bloomberg office.
The reason we're talking about this is because the fried chicken sandwich wars are back, if they ever ended at all. And we're not talking just about Chick-fil-A versus Popeyes versus McDonald's, KFC, Shake Shack, and the like. As Bloomberg News consumer reporter Dina Schenker writes for Bloomberg Business Week, fried chicken sandwiches are no longer just the domain of fast food giants. They now appear on 47% of restaurant menus. That's according to industry research and consulting firm Technomic, while burgers are only on 41% and are tracking slightly downward. Dina joins us right now from New York City. Dina, you get into the history of the chicken sandwich wars, which really brought me back, I'll be honest. What's going on now, and sort of share your own personal experience finding a chicken sandwich in like a very unlikely place?
So basically the chicken sandwich has gone from like this hot new thing to you better have one on your menu and it better be more interesting than your basic chicken sandwich with some mayo and maybe some pickles. The one that really got our attention was at Dig, because Dig is a salad chain, and they started offering a crispy chicken sandwich. Now, their sandwich, they like to point out, is baked. It's not fried, and it is antibiotic-free chicken, so it's a bit of an upgrade from your typical fast food chicken sandwich, but it is very much not what you would expect to find at a typical salad restaurant.
How much is a Dig chicken sandwich?
Oh, a Dig chicken sandwich is definitely going to cost you more than one at KFC or at Chick-fil-A. That much I can tell you.
It's a bougie chicken sandwich. That's exciting, though. I was so excited to read your story and read that Dig is now offering a chicken sandwich, because I love Dig.
You remember when it was called Dig In?
Oh, yeah. I still have to stop myself from saying Dig In.
Oh, yeah. That's how you know you're an OG.
But the fact that it just feels like the American consumer is so in love with chicken sandwiches. And I'm wondering if that is like a uniquely American thing, whether other countries care as deeply about their chicken sandwiches as we do. If there's a chicken war going on in Europe, for example.
Well, I don't know if they love them as much as Americans do, but McDonald's, for example, has talked about how they have built their chicken sandwich into a $1 billion worldwide brand. So they are just, going international with it. This is not just for Americans by any means.
I'm wondering about Gen Z and how Gen Z plays into this, because as you write, they like their chicken.
Yeah, Gen Z loves chicken. We've seen a decline in beef for a long time. Actually, it was like last year, maybe 2 years ago, we were talking to some Gen Z consumers about why they like chicken so much. And they seem to be just like pretty well aware of the fact that chicken is, tends to be healthier than beef and better for the environment. They don't really seem to care too much that it's easier to cook. That's like something us old people seem to notice. But they really, really like chicken. And the restaurant companies have noticed. We noticed when Taco Bell was like, we're going to do more chicken for Gen Z. And so seeing these chicken sandwich wars, one of the research firms pointed to Gen Z as a big part of the reason why.
That's so interesting. And I guess if you think about where the future growth opportunities are and what sort of demographics you want to prioritize, if you're a Chick-fil-A, if you're a KFC, if you're a McDonald's, you're thinking deeply about what Gen Z likes.
Oh yeah, for sure. I mean, definitely. This is where the market. This is where everybody's looking. And one thing that Gen Z really likes is sauces and variety. And I think millennials. I think we should take some credit for all of the condiments that we kind of brought into mainstream. But Gen Z has really taken it further. They love having like lots of different sauces to dip in, et cetera. So that's, I think that's really a lot of the differentiator from one chicken sandwich to the other. A lot of it has to do with the sauce, which might explain why now so much of the so-called chicken sandwich wars is moving into nuggets and being like super saucy nuggets.
I had nuggets for lunch. I love the Chick-fil-A nuggets. Yeah, I mean, how many times are we going to bring it up on a 3-hour broadcast? But this is...
What kind of sauce did you dip in?
Just the Chick-fil-A sauce, of
course.
Can
buy a bottle of that.
Yeah,
I didn't know that until reading Dina's story.
No, they were offering it too. They said, do you want to buy a bottle of sauce for $3.25? And I said, no. Because I'm not Gen Z, apparently. But the conversation that we're having and the points that you made about Gen Z values options and choices. I mean, it kind of reminds me of another tectonic shift that's underway going on in the soda world right now, where you had Dr. Pepper become the second most popular brand. And they overtook Pepsi, which is hard to do. They're like neck and neck right now. Coke is in a whole different league. But part of the reason that happened is because you have Dr. Pepper going viral on social media, and Dr. Pepper has also really leaned into introducing new flavors on a pretty regular schedule because Gen Z likes flavors and they like new things. But I wonder how social media plays into all of this, these chicken sandwich wars. I mean, it feels like every once in a while these sandwiches go viral, for example.
Yeah, I mean, it's really funny on social media because I think every brand wants to like dominate social media and become part of, the conversation that beyond their own tweets. But it's really hard to do that. It's really rare. But that's really what launched so much of the craze on this was that when Popeyes launched their chicken sandwich, they talked about it they tweeted about it. And then Chick-fil-A tweeted sort of what seemed like a response, a subtweet, if you will. And then Popeyes responded with "y'all good," and that was it. That was the beginning of everybody needed a chicken sandwich. And of course, the chicken sandwich wars are a special kind of war because in these wars, everybody wins instead of everybody loses. So Chick-fil-A and Popeyes both, saw sales go up, and now all the fast food restaurants and more are, doing really well on this.
The rest, as they say, is history. Check out Dina's story on the Bloomberg Terminal and at Bloomberg.com. She writes it for Business Week. Dina is a Bloomberg News consumer reporter. And she joins us from New York City.
Everyone wins.
You're going to get a dig sandwich now.
Literally tomorrow, maybe tonight.
Okay, there's time. You're listening to Bloomberg Business Week, and this is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pelletin. Nvidia shares advanced today, even as French antitrust regulators prepare to charge Nvidia over alleged anti-competitive practices. This, according to Reuters. Nvidia was up today by 0.6%. In the meantime, Nvidia Vice President Simona Jankowski is becoming Chief Financial Officer at Light Matter, joining a chip startup that is angling to become part of the AI computing boom. Jankowski is taking the role after a nearly 7-year stint at Nvidia. Again, Nvidia today up by 0.6%. Tesla may be running out of excuses for its weaker sales. Elon Musk's electric vehicle giant is expected to post a 5.4% drop in quarterly deliveries tomorrow when it releases that report. And we get more from Global Autos editor Craig Trudell.
We've seen just consistently analysts, coming out and pairing their forecasts for vehicle deliveries for the second quarter. So, the expectation pretty universally is that the company will have its second year-over-year decline. The last time that they had back-to-back quarters where they were down was in 2012 when they were phasing out the Roadster, their first vehicle ever. So you really have to go back a long ways, to find the last time that this, growth company wasn't growing.
Bloomberg's Craig Trudell. Today, we had Tesla shares advancing by 6%. Sources tell Bloomberg Teva Pharmaceutical Industries is being investigated by the Federal Trade Commission over patents for certain drugs, including asthma inhalers. Teva shares advanced today by 0.5%. And those are some of our top company stories at this hour. I'm Charlie Pelletin. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week. That's Katie Greifeld in for Carol Messer this afternoon. I'm Tim Stenivek. Let's get a check of the latest world and national news. We got Amy Morris in the Bloomberg 99.1 Newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. The Democratic National Convention in Chicago starts August 19th. Yet Bloomberg News has learned the Democratic National Committee is considering formally nominating Joe Biden as early as mid-July to ensure the president is on the November ballots. Bloomberg's Mario Parker says this happened during a flurry of phone calls over the weekend.
Of course, some of this comes as there's calls from within the party for Biden to step aside. So just speaking with sources within the Democratic Party, a lot of them just wanted to stress that Biden is our nominee.
A potential date for Biden's nomination will be July 21st, when the Democratic Convention's Credentials Committee meets virtually. That's according to people familiar with the matter who spoke on condition of anonymity. Supreme Court Justice John Roberts says the nature of U.S. presidential power entitles an ex-president to absolute immunity from criminal prosecution for official acts. But during today's ruling, Roberts said there is no immunity for unofficial acts. The Supreme Court decision has extended the delay in the Washington criminal case against former President Donald Trump on charges he plotted to overturn his 2020 election loss. Justice Sonia Sotomayor dissented, saying the court's decision makes a mockery of the principle no man is above the law. Longtime Trump ally Steve Bannon was taken into custody today. He surrendered at a federal prison to begin a 4-month sentence on contempt charges for defying a subpoena in the congressional investigation in the U.S. Capitol attack. Bannon is also facing criminal charges in New York State court, alleging he duped donors who gave money to build a wall along the U.S.-Mexico border. His trial for money laundering, conspiracy, and fraud was postponed until the end of September. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. Now back to Bloomberg Business Week with Tim Stenivek and Katie Greifeld.
Hey, Amy, thanks so much. Do appreciate that. Just going through some of the most read stories on the Bloomberg terminal. We've covered quite a few of them, but you brought my attention to a story about none other than Steve Ballmer. What's going on?
The Microsoft billionaires. This is interesting. Steve Ballmer passed Bill Gates on Monday to become the 6th richest person in the world. This is the first time that the former CEO of Microsoft has been wealthier than Bill Gates, of course, the company's co-founder. I thought this was fascinating. Of course, we know Bill Gates is very involved in charity and loves to give his fortune away. More than 90% of Ballmer's $157.2 billion net worth is in Microsoft shares. That's a pretty good position.
It's incredible. And I think what's so notable about this, Katie, is that Bill Gates has diversified his fortune. So half his wealth is held through Cascade Investments. It's used Microsoft stock to buy other types of companies. He owns $21 billion in waste management company Republic Services through Cascade. But Ballmer's held on to his wealth, and he's actually surpassed as a result of this. The thing that's funny is, like, you talk to any financial advisor, they're like, okay, if you get rich off of one company, and it goes public, what you want to do is diversify.
And Steve Ballmer said,
No.
absolutely not.
He's like, yeah, I'll diversify by buying the Clippers. Okay, that's what I'll do.
Yeah.
But I'm not going to sell any other Microsoft stock. Whereas Bill Gates has made a lot of investments, and he's done a lot with philanthropy and stuff. So
I mean, if you're going to have an ultra concentrated position, more than 90% of your net worth, I hope you ran the company at some point.
He did run the company.
Exactly.
Oh, okay.
That's the joke,
But it
Tim.
wasn't great when he ran the company.
No, but he knows that business intimately, is what I'm saying. You know the ins and outs of that company.
Yeah, and he was obviously a very early employee, and they're from the ground up. But that's what was so interesting. Like, Microsoft has had so many ups and downs.
Yeah.
And a long period of being down where it didn't look like it was going to have a future like this.
You know what they say?
Team up with OpenAI? Is that what they say?
They say diamond hands. You got to hold on.
Diamond hands.
He stuck to his convictions. Of course, Bill Gates, again, he's been slowly reducing his fortune through philanthropy. We know that, and that explains a lot, in addition to his diversifying.
Did you have fun today, Katie?
Yeah.
Yeah?
Enough that I think I'm going to come back tomorrow.
All right. That sounds good.
Yeah.
Katie in for Carol Master once again tomorrow. And that is going to do it for Bloomberg Business Week. I'm Tim Stanovic, along with Katie Greifeld. Thanks for listening. Bloomberg Balance of Power starts right now.
From the world of politics to the world of business, this is Balance of Power. Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Kaylee Lines, I'm Joe Matthew.
The Supreme Court rules Donald Trump has some immunity from prosecution for official presidential acts, effectively ensuring his Washington trial won't happen before the election.
We'll have reaction this hour from law professor Jessica Roth, and we'll assess the political ramifications with Charlie Cook of the Cook Political Report.
He'll also weigh in on the fallout from last week's presidential debate. As Bloomberg reports, the DNC is considering formally nominating Joe Biden as early as mid-July, in part to stamp out chatter of him stepping out of the 2024 race.
Thanks for joining us here this Monday. I'm Joe Matthew, alongside Kaylee Lines in Washington here on Bloomberg TV and radio, where we begin with the decision from the Supreme Court today on presidential immunity. In a 6-3 ruling along ideological lines, the court said that Donald Trump has some immunity to criminal charges, sending the case back to federal district court. Writing for the majority, Chief Justice John Roberts said the president enjoys no immunity for his unofficial acts, and not everything the president does is official. The president is not above the law, but Congress may not criminalize the president's conduct in carrying out the responsibilities of the executive branch under the Constitution.
Justice Sonia Sotomayor wrote in dissent and said, in quote, "Today's decision to grant former presidents criminal immunity reshapes the institution of the presidency. It makes a mockery of the principle foundational to our Constitution and system of government that no man is above the law. With fear for our democracy," she ends, "I dissent." Let's bring in now Bloomberg's Greg Storr, who covers the Supreme Court and therefore has been incredibly busy on this historic day. So, Greg, obviously this has implications directly for the prosecution of Donald Trump, but the court here today also potentially changed the course of the office of the presidency for the future.
Yeah, it sure did. In fact, it didn't really talk at all about, what specifically it means for whether or not a trial can go forward before the election this year. This ruling was all about the spheres of areas where the president should not have to worry, the court said, about the prospect of criminal prosecution. There are areas that the Constitution says are entirely within the president's power, like the pardon power, can't be prosecuted for anything he does there. Other areas where it is still within the president's official authority, though perhaps not quite as exclusive as with the pardon power, and in those areas there's a presumption against criminal prosecution. So it really walled off a lot of areas where the president can't be prosecuted.
So it appears there will not be time for Jack Smith to have his January 6th trial here in Washington before the election, as this is knocked down to a lower court and they try to determine what is official and what is not. In the meantime, what is the status of the sitting president of the United States? Is it good to be king?
It is, in the sense that if you want to be somebody who doesn't have to worry about criminal prosecution, yes. In terms of the trial, it is near certain it cannot happen this year. There's just not going to be enough time. In fact, this could be a process that takes I'm speculating here, but easily a year before a trial starts, just because Judge Chutkan is going to have to make a lot of rulings. Those rulings will go up on appeal, come back to the Supreme Court. All that will have to happen before there's a prosecution. And of course, if Donald Trump wins the election, there won't be one.
Yeah, it can make the whole thing go away. To your point, though, on this idea that this could all come back to the Supreme Court anyway, why not rule today and directly say what constitutes an official act and what is a private act? Why wouldn't the justices make that decision for themselves?
Well, I think what they would say is we don't decide more than we have to. And, we want to let lower court judges take first crack at things before we jump in to decide them. They did say that there's some areas here that are off limits. For example, his conversations with people at the Justice Department, they said can't be prosecuted for that. Other areas, the court said, are going to require a district judge looking into the facts about the context of tweets he put out and the things he said in that speech at the Ellipse. And it's going to require more of a factual determination than has been done so far. And then the court left open the possibility that it can review that factual determination.
So it's likely then, since there is no real ruling today, it goes to the lower court and then eventually comes back to this court. Is that safe to expect?
Yeah, that is certainly possible. One thing they did make clear is that all this has to happen before a trial, that this is not a case. One of the things Jack Smith asked for as sort of a fallback argument was, hey, even if there's some stuff that we can't use, even if there's some official acts that you're saying can't be part of this case, let the district judge worry about that at trial.